Alright guys, so how's it going guys? Welcome to a brand new video. So in this video I'll be showing you guys a very simple 1-minute ICT scalping strategy that is going to be a game changer in the way you trade. So first and first, I want to show you guys is the indicator I use. So what you want to do is come to this indicator section here and search for an indicator called Asian Session Range. So you use this indicator, this FX and Asian Session Range. This is one I love to use the most. Is it by Rob Minty? When you click on it, it will be added to your chart like this. So you can just play around with the settings. I'll be making a new video. On my next video I showed how I set this Asian range up. You can have your own different preference on how you use this indicator, but this is just how I use it, just to show me the range, and that's all, nothing more, just the range of the Asian session. And the other indicator I use is called supply demand zone. That's one. You can also come to this section, the indicator section, and search for supply demand zone. The zone is in all caps, so you click on it, it'll be added to your chart. And yeah, that is pretty much what you need to make this strategy work. And so I want to show you guys a blueprint, a breakdown of how this strategy works. It's going to be very quick because it's easy. It's just very easy. So first and first, you want to find the Asian session highs and lows. Let me just plot this out real quick. So let's just say this is the Asian session mid range, the middle of the Asian session. This is the highs, this is the lows. And let's say price was let's say price gave us this lows here, gave us this highs, and it was just dancing around this Asian session range. And finally it broke out and retraces back into the Asian session range. So let's just stop here. Let me just do a quick explanation on what I'm trying to do. So let's just assume this is the Asian session highs and this is the lows. Price, all right, so price made this highs. Okay, let me adjust it to fit the highs. So it's made this highs and made this lows. So this is the London session. This golden line is the start of London session. So once price closes, once price enters this zone here, it indicates a London session range, a different session. This is the Asian, this is the London. So price clearly came down, broke below the Asian session range it made. So this is a grab of liquidity, because to me, I would say that there should and must have been liquidity sitting down here. So price clearly came back, took those liquidity out, and retraces back into this Asian session range. So once I see something like this, I would obviously be looking out for a supply demand zone. So let me just use a candlestick to draw it out. So let's say this is the retracement back. So price is retracing, and let's say we spot an order block here, which is the last bearish candlestick before the move, before this move to the upside. And we would definitely be looking to mark out this order block and use that as our area of interest. So this will clearly be our area of interest, where we'll be looking to take our trade for a buy. So we're looking for a buy here. So once price retraces back to this order block, then we'll be looking to take a buy right at this point. So a buy here, stop loss maybe slightly below the swing lows of this order block, or you can just use this order block zone as your stop loss, whichever one you want. Or you can use the swing low that price made, the lowest point price made before the retracement back to the upside. And yeah, you can see, and take a 1 to 1, a 1 to 1.5, a 1 to 2, whatever. So let me show you guys a real life example of this strategy real quick. So how it works is, you can see this line, this middle line, this horizontal line here, this one, this signifies London session. Anything like from here to the front is my London session. Anything from here to the back side is the Asian session. So this is the Asian session here. All right, so this is the highs price made, and this is the lows during this Asian session range. All right, so you take note of this, which you don't have to, because this indicator already points that out for you. So all you have to do is wait during the London session, we want to see a grab of liquidity. So let's look at this. This is a 1 minute time frame. The reason I'm using the 1 minute time frame is because most of my students, we like to get this fast trade and make profits real quick. As you can see, this is the London session, and price was just busy, dancing around, and finally we got a breakout of this Asian session range. All right, we got a breakout here. You can see price broke out, but this breakout, we want to see a proper move to the downside, like a proper breakout. So I'm not saying this is not a proper breakout, but at least you can see this wick price did here. This is a good wick because this is indicating a grab of liquidity, but that is not valid until we see another setup. All right, so let me show you guys something real quick. Price went down, crashed down, and kept on going down. So the only thing that will validate this setup is price goes below this Asian session range and retraces back into this Asian session range, goes into this Asian session range line, and gives us a supply demand zone. So if price breaks below, we're looking for a buy, and if price breaks above, we're looking for a sell. So clearly you can see price broke below this Asian session range, came back up, and I'll be looking to take my trade here at this point here. Let me take my trade here, and yeah, so price came back, retested that order block. This is an order block, the last bearish candlestick before this bullish move to the upside, and that is our order block. So you can take a trade here, you take a trade there, and your stop loss should be probably slightly below the swing lows, or you can put your stop loss below the order block. It all depends on what you want, but for this video, let's just keep it down there. And TP, you could target 1 to 1, 1 to 1.5, 1 to 2, 1 to 3. As you can see, this trade went for a 1 to 3.37 on just this one single trade, which is pretty damn interesting, pretty damn sweet. Alright, so for this strategy, I would recommend you use proper risk management, and please, do not risk more than you can afford to lose. Also, please stick to the plan and use a stop loss. You should just learn to cut your losses and move on with your life. If this trade ends up being a losing trade, then there's probably going to be 1,000 more trades that's going to come up in the future. So all you have to do is just stick to the plan, do what you got to do, take that trade at that moment and set your stop loss, set your take profit, and watch the trade go into your profit or go against you. Guys, there's one thing that's going to happen. It's either you win or you lose. That's it. So if you win, fine. If you lose, fine. Just work. This is trading, guys. There's no rule that states that you must win every single time. Guys, please take note. There's no rule that indicates that you must win every single time. Learn to cut your losses, learn to take L's, learn to take wins, and be a better trader. So if I will start streaming, I will be showing you guys how I use this strategy in a real life market. This is not exactly how ICT uses this strategy. This is just my own preference, my own way of trading using this ICT's concept. I'm going to give out 5 strategies to my VIP students, but right now currently we only have 3 strategies on the VIP course, so I'll be giving out more 2 more strategies. And guys, if you want to join the VIP signals group, you can click the first link in the description or DM me on Instagram. If you want to join the mentorship, you want me to mentor you so you can become a good trader and trade the exact way I trade, also DM me on Instagram. So if you enjoyed this video, please make sure to drop a like, subscribe, and